Hey there, thank you for tuning in. This is where we break down investing strategies and money-making ideas in a way that actually makes sense. Today, we're diving into something that could change the way you invest forever. It's an intro to dividend ETFs. They are a simple, low-maintenance way to earn passive income while growing your wealth. Please note that I'm not a financial planner, advisor, or certified expert in finance and investing. The information and opinions I share are for informational purposes only and should not be considered financial advice. Now, I know what you might be thinking. What's passive income? That sounds like one of those online get-rich-quick schemes. But trust me on this is the real deal. Imagine getting paid every month or every quarter just for holding an investment. That's the magic of dividend ETFs. And guess what the best part of dividend ETF investing is? You don't have to be a stock market genius to make it work. So, let's take a few minutes and break it all down. All right, now picture this. Imagine you own a vending machine. Every time someone buys a snack, you make a little money, right? Now, what if instead of one vending machine, you had 100 of them, spread across different locations, all bringing in cash regularly? That's basically how dividend ETFs work. Instead of owning just one stock that pays you dividends, you own a basket of them. Some companies might pay more, some might pay less, but overall, you're collecting a steady stream of income. And unlike managing a vending machine business, you don't have to restock shelves or fix broken coin slots. The ETF managers do the heavy lifting for you. All you have to do is invest and let it grow. Now, some people love picking individual dividend stocks, and that's great. But let's be real, that can get pretty risky. Think about it. Back in the early 2000s, General Electric was a dividend powerhouse. Investors relied on those payouts like clockwork. Then bam! Financial troubles hit, and they slashed their dividends. If you had all your money in GE, your passive income took a huge hit overnight. But with a dividend ETF, you're not betting on just one company. If one stock stumbles, the other stocks in the fund can balance things out. That's called diversification, and that's your best friend in investing. Plus, let's be honest, who has time to research dozens of companies, track earnings reports, and constantly adjust their portfolio? With an ETF, professionals do that for you. Of course, not all dividend ETFs are the same. Depending on your goals, you might go for high-yield dividend ETFs. These focus on stocks with the highest dividend payouts. But beware, sometimes high yields can mean high risk. A great example is the JP Morgan Equity Premium Income ETF, JEPI. It combines dividend stocks with option strategies to boost income. Then there are dividend growth ETFs. These hold companies that consistently increase their dividends. Think of it like planting fruit trees that produce more fruit every year. Another solid pick is the Vanguard Dividend Appreciation ETF, VIG. Some people might be interested in international dividend ETFs. If you want global exposure, these ETFs include dividend stocks from all over the world. The Vanguard International High Dividend Yield ETF, VYMI, is a popular choice for that. Some income investors may want covered call dividend ETFs. These ETFs use options to generate extra cash, but at the cost of potential stock price gains. A classic example of this is the Global S&P 500 Covered Call ETF, XYLD. So, whether you're looking for high income, steady growth, or global diversification, there's a dividend ETF just right for you. So why do investors love dividend ETFs? Well, that's an easy question to answer. First, it's the passive income. You get paid just for holding shares. The second thing is the magic of compounding growth. By reinvesting the dividends, you can supercharge your returns over time. Also, there's the lower risk factor. Instead of putting all your eggs in one basket, you spread your risk across multiple companies. And then how about tax efficiency? Some ETFs are structured to be more tax-friendly, which is a big win for long-term investors. But please understand, no investment is going to be perfect. Dividend ETFs do have some risks. Dividend cuts are a possibility. If companies in the ETF reduce or eliminate their dividends, then your income drops. So look for dividend aristocrats, companies who have paid dividends for 25 straight years or more. Or better yet, dividend kings, companies who have paid dividends for 50 years or more. There might be some interest rate sensitivity. When interest rates rise, some investors shift money to bonds, making dividend stocks less attractive. And of course, there is market volatility. Just because these ETFs focus on income doesn't mean their prices don't fluctuate. That's why choosing the right dividend ETF is key. If you're thinking about investing, here's what to look for. First, look at the ETF's dividend yield. Higher yields can be tempting, but make sure they're sustainable. Second, look closely at the ETF's expense ratio. Why? Because fees really do matter. The lower the expense ratio is, the better that is for you. Some ETFs have very low expense ratios. Look for those. The third thing is, look at the ETF's track record for paying dividends. Look for funds that have consistently paid or grown their dividends. And number 4 is, look at the ETF's holdings in sectors. Make sure it's diversified. See if the ETF aligns with your risk tolerance and investment goals. Here are a few of the most popular dividend ETFs. The SPDR S&P 500 ETF Trust SPYI, which uses a covered call strategy for consistent income. The JP Morgan Equity Premium Income ETF JEPI with a mix of high dividend stocks and option strategies. Or maybe the Vanguard High Dividend Yield ETF VYM, a low-cost, reliable dividend ETF. So here's the question. Is a dividend ETF right for you? Well, if you're looking for a hassle-free way to build passive income, they're a fantastic option. They give you exposure to strong dividend-paying companies while reducing the risks of picking individual stocks. If you're just starting out, consider doing some research and look up a few of the ETFs we've talked about today. Compare their performance and see which one fits your goals. And remember, investing is not a sprint, it's a marathon. And that just about wraps it up for this episode of Intro to Dividend ETFs. If you found this episode helpful, please be sure to subscribe and share it with a friend who's looking to grow their wealth. Also, hit that notification bell so you'll be notified when there is a new video with more investing tips and strategies. Thanks for tuning in to the Dividend Dynamos channel. I'll catch you next time. Until then, keep investing smart and building that passive income.